morning, good morning, good morning, everybody. Everybody who was able to get any kind of sleep this week, you are lucky. I got 11 and a half hours of sleep since the opening bell on Monday. And coming into Friday, just because the market is open and they're going to have an opening bell and a closing bell, you have zero obligation to be involved. So the choice is yours. Today, we get some crude oil companies reporting earnings, but then at 8:30 we get the proper PCE, core PCE, more significant with the FOMC meeting coming up next week, consumer spending, personal income, and the University of Michigan sentiment final for the month. End of the day, nothing, absolutely nothing taking place after that. Yesterday's economic data, you saw the results. We are in the shit. After the closing bell, you saw the results. Google and Microsoft will save your life. They will pay your electric bills. They will put gasoline in your car. They will put food on your table. There's nothing at all to worry about. So I take you to the charts first, bring you over here to the VIX as we've continued to pound the VIX into everybody's head. Big spike yesterday up into the 17s, your fade down, your fail at 1622 into the end of the day, and then your result overnight, which has almost filled that gap from back on April 11th. Almost. We're down here in the 15s. We are not in the 14s. We are not in the 13s. We are not in the 12s. So don't go thinking everything is rosy and cheery just because Google will put food on your table. SPX, as for the week, go back to the beginning of the week where talk to you about us having a green week. We were getting a green week this week. That was what was on the table. So you had your 49.80, 49.85 bullish put spread was paying 250 at the beginning of the week. Was down to 50 cents, 30 cents as we went into Wednesday. Yesterday, I highlighted it again that it was getting $1.75. And obviously, with your gap up over the night, it is pretty clear that you had not only one, but two chances to take that trade. And here we are. On the spreads trades during the course of the week, it's been a great week. You've had 100% trades left, right, and center. They've been there all week long. And here we are going into Friday. Friday, now we will have a new gap. Having filled this gap, will be at the moment somewhere right around here. So I'm just going to leave that there and try and indicate how you should have your chart set up. And I will extend this out a year, and that takes care of this gap, which will be filled overnight. You know what? Let's not take that off. We have that data coming out in the morning. QQQ. Talked about 430, talked about 430, talked about 430, talked about 430. Got 430 here going into Wednesday, right at the beginning of the day. Incredible dip down, perfect support, all because of Facebook and all of that economic data that came out yesterday morning. And Google saved the world right back to 430. And as you can see, fading off here as the morning goes. IWM. IWM has been spectacular. Every day of the week, there has been from a maximum 200% to a maximum 1,300% trade on IWM. It has been spectacular. So I really do hope that there are a handful of individuals that will go out and start doing some homework on IWM, since it is a half the price of QQQ, half the price of SPY, 0 DTE, meaning your contracts are extremely cheap to be able to buy at the money or out of the money, and it is a very simple instrument to chart and to do your data on. So that basically leaves us where we're at there. And again, going into a big economic data report morning, I bring you over to the YM, and the YM on the week to date, having peaked Wednesday night, early overnight, fading off on all of that horrible economic data there on yesterday morning. And here we are fluttering right at yesterday's close, fluttering. Understanding Google and Microsoft, I could be wrong, been wrong once or twice before, are in the Dow, and you're fluttering nowhere. Come over onto the NQ, bang, bang, boom, up there to that minus 5% line, which is your 430 over there on the QQQ. Your big fade down, again, holding on to that support level that we talked about, down at 418, 417. And then Google and Microsoft save the world. Bang, spike up there to where your 430 is and fading off overnight. So again, nothing spectacular other than we were expecting to get a green week. Bring it over to the ES, and again, same thing. Talked about 51.32 early in the week as far as resistance over there on the futures. Fade off, big drop down, almost double bottom to the lows of the week over there on Monday. And then Google and Microsoft saved the day after, as you all know, 10 o'clock yesterday morning, it was profit taking time, fading off here overnight. So I bring you over to the big unknown. And when I say unknown, I mean that it's very difficult for a person like myself that doesn't fully understand how to explain the economic impact of the yen way up here above 150, above 153, above 155, now into pushing the 157s. This is a Hindenburg omen. And that's the best thing I can say about it. So I leave you off with Google. Google, on the earnings spike, I will go to the 1 minute chart. Your earnings spike after having dropped down to 150. Everybody in the pre-earnings trade for Google that we put out 2 days ago, take the money. You want to risk it? You go ahead and risk it. This is why I don't trade earnings. We got the dip that we wanted. These options that were out there were for July. Boom, better than 30% on the trade. And you got your report. Up here in the 175s, having peaked at 181 overnight, an amazing gap that is going to be created now, having closed over here as to where we're at. An absolutely incredible gap that's going to be created. Leave it out there for a year, and the close is 156.00. Should not be very difficult for many people to be able to put out there. So I zoom you out onto a 30-day. Very difficult to see anything because of it being a 30-day. I zoom you out to a 90-day. Still very difficult to see having come onto a 90-day with the lows in March of this year, down here at 130. Now here is your earnings over in January. Your earnings come out here after already having the closing bell, and kabam, splash, down big, 154, down here into the 140s. Talked about this in the video that I put out there for this. Zoom you out a little bit wider, and we come out here to your earnings over in October. Boom, 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 boom. Here's your earnings, your big spike, and your splash down after earnings. Come out a little bit further and start looking at where it's at from your earnings back in February and April of last year. Here is your February over in 2023. Your splashdown with the market correcting at the same time back then in February. Here you are over in April. April when AI was created in 2023. And here are all your results after that. So for me, having already spent the time and also made the money on the Google trade for July, I am going to be getting back into Google. I am going to be getting back into Google after the market opens. I want to see the pricing. I don't know whether I'm going with June. I don't know whether I'm going with July. I don't know if I'm going with 180 puts. I don't know if I'm going with 170 puts. I don't know. I need to see the pricing. And until I see the pricing after the opening bell, I don't really care what it does over the course of today. if I'm going to be buying June, if I'm going to be buying July. I don't care because I'm buying 2 months, 3 months out. I don't care what it does today. I don't care. And that's the benefit of buying time rather than going and trading your zero DTE. As for zero DTE, I would be very, very cautious about trading 170 puts. Over on Microsoft, not much of a big banger over there because all you've done is come back over to your all-time highs, where zoom it out 180, we can get it on a 90. Boom, 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 boom. Well, these were the all-time highs that were placed back in February. I didn't update my chart when we had the higher highs in March, and here we are right back over to the highs over in February. Hoo. Come on onto the 1 minute chart and able to update some drawings. This gap from January is filled. We can remove that. And here is the new gap. The new gap being the close of 399.04. And many of you may remember that I had the Google and Microsoft trades out quite a few weeks ago, talking about with Google up here at 420 being the trigger and going out a month, 2 months out, looking for a move down to 400. Well, guess what? You got the exact same trade coming at you once again, and that is with Microsoft. So it's your choice what you want to do with it. But once again, when you are over there talking about, what to do, what are you going to do? The market's open. I need to get in the trade. I have to be involved. I have to do this. I have to get into this trade. You've got to really be able to have the adult conversation with yourself, which only you can do. And you've got to be able to ask yourself, okay, I have this fictitious daily goal that tells me that I have to make this much money or else I have not satisfied myself as a trader. I have not hit my goal as a trader. And what I see, for the most part of forever, guys who put those kind of forced reactions onto themselves, forced that they have to go out and make that kind of money in the course of a day, always wind up fucking up. And the majority of the reason why they wind up fucking up is they spend so much time on what they need to do from that point of view. That needs to be moved down to here. Instead of going out there and actually studying what's going on with everything. Where are we? How did we get here? Where are my charts? What's going on with my charts? And you can lead a mouse that's blind to a piece of cheese, but if they want to go out there and do credit spreads, there's nothing you can do about it. They're going to go out there and they're going to do credit spreads. So 50-20, we did wind up breaking the minus 1%, so I can go ahead and notch that on there. And hey, guys, you can shut this off at any time that you like, because I'm done with the charts and the update. I'm just going to continue rambling on here because, like we had there yesterday, the 50-55, 50-50 calls at 2:50 at 2 o'clock, because we closed below 50-50. That makes that again 50-55. A 100% trade. In the early morning yesterday, early morning, as we were going in there, where was it? Well, you had the 50-80, 50-75 calls overnight. Where are we on Wednesday going into the end of the day? Right there, 49.85, 49.90 puts at 250 or better. And they were producing a little bit better than that. So 48.95, 49.90, just like we had the other day. Imagine that. And there you are at getting your 100% on the exact same trade. The trade of the week today, the 49.85, 49.90 puts, looking for a close above 49.87. Will be producing themselves a 100% trade. Over onto the QQQ. I haven't updated this today, so I'm moving over to that. And again, this is not hard to go and do your updates every day. Literally takes only a couple of seconds. and why I have very, very little sympathy for anybody who's not able to take advantage of what's going on in the market, who doesn't go out and do their own spreadsheets. Boo fucking who. Wake up, be an adult. You expect your kids to do homework and you're not going to fucking do it? And you've got money on the table? We had a major gap down yesterday, quite obviously. A nice 7-point day. We did close green above the open, obviously. And we did close red below the close. We did get minus 1%. We almost got minus 2%. Almost. So that can be moved over to here. And now I'm going to get a clean line because I don't want anything with lines. And looking at there where we are for today, and that being the plus 1% being at 428.69, we were at that last night. We've already faded off of that plus 1% as of now. So keep that in mind. And yes, I did go out and create an IWM spreadsheet, and I'm not done with it. I'm only here in 2023. And I finally figured out what my pronouns are. I identify as she, it. I like it. Those are my pronouns. She, it. So here we go onto the IWM. Same thing. Very, very difficult to come over. Oh, no, this was because I had it on yesterday. I didn't get it. We did there. No. Come on. It's giving me April 2024 for some reason. And today's 26, so I'm gonna have to figure this one out. I'm gonna play around with it to get it updated because I've made an obvious mistake. 2023, just to make it right. Yeah, I'll get that updated. And why am I not getting that? Oh, why? There you go. You see, even a stupid turtle can figure out how to use Yahoo Finance to get the data. So here we are, onto my 12, because that's what I want. I want it to the right, get it all updated, boom. And the way I color-coded mine was wait, what did I get wrong here? What did I do? Oh, yeah, from 195 to 200, I have it as one color, a 5-point range. That's right. I remember now what I did. What are you doing? Come on, man. And below 195 to 190, in that 5-point range, I have that set up in its own way. Let's go ahead and color code all of this because that's what we're going to do anyway. And we had a 2-point gap down, a green close, over the open, a red close below previous day's close. We did hit minus 1%, and we wound up going minus 1.98% on the day. So I'm going to click that because I want to know where my plus 1% and minus 1% are for today. And having tracked this, we've got 3 red weeks in a row. We've been averaging pretty much around 8 points, 8 to 9 points for the course of the week. Here we are at 198 and 199.32 and 192.70. So we're just in there at around 6.5 points for the week. Going to be a tiny little week. On the month, 12 points, 15, 16 points, 14 points, and I haven't gone into 2022 yet, or sorry, 2023 yet. All I did was spend the time to go and color code what I want to see over here on 2023. And I like what I've got, although I still need to go and update some stuff. I still need to go and update my plus 1%, but again, it's up to you. It's all on your shoulders. I'm here to help as much as I can, but I am not going to live very long if I'm going to keep having 11-hour weeks of sleep just so somebody can go out there and do a 1 contract 9-cent option. it ain't going to last that much longer. So pull your heads out of your ass. Those of you that still have them up there, those of you that are absolutely crushing it, all I can say, dude, is you're my ambassador of fucking quant. You guys are exactly the reason why I only sleep 11 hours a week. Keith, all of you, I'm not pulling any names out that I'm not forgetting, but you guys make me proud. You really do. And I hope you all enjoy your weekend.